Everyone wants a place where they can dump their money without thinking and earn an excellent return. Well, I'm going to tell you one of my favorite low-risk investments that's easy to do, like stupid easy to do, and doesn't take much money to get started. By the end of this, you'll know exactly which stocks you should consider buying. These are definitely some of the best investments for both new and experienced investors. So if you're ready to grow your green faster than a chia pet, I think you'll like what I have for you today. For those new to the channel, welcome to the Income Series where we discuss all things finance, business, and investing. I'm Brian Clark, living down here in Puerto Rico. Not surprisingly, it's already early February and our like button has yet to find a Valentine's Day. She literally texted me this morning wondering why you haven't called. This like button is lonely down there and has been waiting for you to flirt with her since this video started. She already went to prom alone 2 years ago, and heaven knows I still haven't heard the end of that. So if you haven't yet, turn that like button blue so I don't have to fall asleep listening to her cry in the other room. To get started, the investment we will be talking about today will even make the dumbest of investors feel like a genius after a few years. Seriously, almost everyone should put a portion of their money in these investments. Warren Buffett said a low-cost index fund is the most sensible equity investment for the great majority of investors. Mic drop. And that's the money-making strategy we will be talking about today. Index funds could likely be one of your best investments over the course of your lifetime. Warren Buffett is all about promoting index funds, and there's a good reason why. Index funds outperform 99% of individual investors and 95% of professional investors. These numbers are crazy. If that doesn't convince you that at least half your money should be in an index fund, I don't know what will. You're probably thinking, but Brian, index funds aren't sexy like that shiny GameStop stock in my account. You know what's sexy? Money. Money is sexy. So index funds are as sexy as ham. And ask yourself, are you a professional investor? I know professional investors. You don't want their lifestyle. Just be glad you have an alternative to looking at charts and balance sheets all day long. I get it if it's your passion and you want to do it anyways. But if it's not, just follow Warren Buffett's advice, invest in index funds, and spend your life doing stuff you enjoy. Now, I actually think there's some general confusion on what an index fund even is. And I get it. There are a lot of investment terms out there, and it's easy to get them mixed up. So let's make sure we're all on the same page. First knowledge bomb is you need to know what a stock index is. A stock index is a group of company stocks like Amazon, Tesla, and Google all lumped together in a single place. Since some companies are larger in value than others within the index, each company will affect the overall price movement of the index relative to its size. Some common indices you're probably familiar with include the S&P 500, NASDAQ, and the Dow. Combined, these three indices have thousands of listed companies, and it's from these that most people invest. Second knowledge bomb is you need to know what a fund is. A fund is when a group of people combine their money to buy stocks or other investments. There's usually a company that manages how and where the money is invested. Funds usually come in the form of mutual funds or exchange-traded funds, also known as ETFs. Now that you understand what a stock index is and also what a fund is, combine the two and bam, you have an index fund. So an index fund is a managed portfolio of stocks that is meant to match and follow a specific stock index. Here's one of Warren Buffett's other famous mic-dropping quotes. Most investors, both institutional and individual, will find that the best way to own common stocks is through an index fund that charges minimal fees. Those following this path are sure to beat the net results delivered by the great majority of investment professionals. Bam! Warren Buffett again said these professional investors will be better off owning index funds. I'm just going to make this super easy for you and go straight into the index funds that I think you should look at. Here's a handful of index funds that could seriously make you rich. The first one I really think you should look at is the Invesco NASDAQ 100 ETF with stock ticker QQQM. I honestly wouldn't fault someone for putting all of their money in this one. This ETF tracks the NASDAQ 100 index, which includes the 100 largest non-financial companies listed on the NASDAQ. The NASDAQ 100 has arguably set the new benchmark of steady positive returns in the stock market, proving to outperform the S&P 500 over the last 12 years. And not just outperforming the S&P 500, but also being less volatile. This includes data from both the 2008 market crash and the market crash we just experienced in 2020. As an example, in March of 2020, the Nasdaq only fell 11%, while the S&P fell almost 20%. The Nasdaq 100 also recovered much sooner than the S&P, and in my opinion, has proved to be much more resilient and adaptive. This is largely to do with the fact that the Nasdaq 100 is very tech-heavy, whose industry has outperformed most others in the market over the last several years. I think you may actually be surprised at what companies you'll actually be getting with this index fund as well. You'll be investing in companies like Apple, Intel, Netflix, and Microsoft. In my opinion, because of what we will see happen in artificial intelligence over the next 20 years, tech companies are well positioned to experience exponential growth and will likely take over other industries. The next index fund you may want to consider is the Vanguard Total Stock Market Index Fund, VTI. This one includes around 3,500 stocks, so it keeps you super well diversified. This is really the index fund to choose if you want something that essentially tracks the entire stock market. This ETF has one of the lowest management fees you're ever going to find of only 0.04%. To give you an idea, that's only $4 for every $10,000 you have invested. So it's not going to be eating much into your yearly returns. The next index fund you should consider is Vanguard S&P 500 Index Fund ETF with stock ticker VOO. This one closely tracks the S&P 500 index and as a result holds 500 individual companies. The S&P 500 traditionally being the benchmark for good returns in the stock market, with a long history of outperforming most professional investors. With this index fund, you'll essentially be getting all large cap companies, which provide a very nice level of stability. The 10 largest of these companies making up 27.5% of the index. I'm quite bullish on many of the large companies found in this index fund over the next decade, and I believe almost everyone should own some portion of these. One of the best parts about investing in an index fund is it requires no skill. As far as investing goes, index funds are about as good as you can get if you want something that's hands-off. The fund is already managed for you, so you don't have to be spending half your time investigating new stocks, watching what is happening to individual industries, or staying up to date on specific company news. And since they are what's called passively managed, the good ones have annual fees around 0.04% or $4 for every $10,000 you have invested. Even with $100,000 invested, you're still only paying a few bucks a month. Most people pay their landscaper better than this. And I want to put this in reference to how much your time is worth. We are literally talking about beating 95% of professional investors on autopilot for a few dollars a month. And keep in mind, there's a big difference between the fees for a passively managed index fund versus a mutual fund. Mutual funds are usually actively managed and average a 0.5 to 1% fee. Think about it. Even if the fund is bringing a return of 10% annually, that's 5 to 10% of your total profits of the year. That can dramatically eat into your earnings and your ability to grow with compound interest. One of the great things about investing in index funds is you automatically stay well diversified. Anyone that follows my channel knows how much I talk about the importance of staying well diversified. And listen, if you want to invest in individual stocks along with index funds, that's fine. Just consider having, say, up to half your savings in index funds to stay diversified. That way you'll only be making bad decisions with up to half your money. One of the best benefits of investing in index funds is to eliminate a lot of emotional trades by investors. It's so easy to get FOMO when you see a specific stock run up and then buy just to watch it crash the next day. It's also easy to keep your money on the sidelines until you see a market correction just to miss out on 15% of market gains, only to be afraid to invest when the correction does happen. There's a common saying in investing, time in the market beats timing the market. This is a seriously important motto to invest by. I'm not saying that you can't use a portion of your money to try your luck with individual stocks or invest in the companies that you believe in, but maybe consider developing good fundamental habits with an index fund as a base to your investment portfolio. And listen, unless you're going to retire in a few years, index funds also make it so you don't have to worry quite so much about market fluctuations. After a crash, we all know that the general market will go back up eventually, and the Federal Reserve will do anything to quickly prop up the market. In fact, consider stock market crashes as just another opportunity to buy more index funds at a discount. And listen, you guys, you got to take action. I literally just told you one of the easiest ways to make good returns without having to do any market research. If you don't have a brokerage account, use my link in the description to build an account at Webull, like right now. Remember, time in the market beats timing the market. It's so easy to do, and like anything in life, you need to take action or you'll miss out. I've been making good money in the stock market, and I want you guys there with me. If you got some original value out of this video, call up that like button and ask her out on a Valentine's date. I know she put a lot of time in this video and she'd really appreciate it. I've also got another video about the basics of investing I think you guys should check out. If you haven't joined the team, become an original OG and click that subscribe button, and you guys have a good day.